Good morning. This is Tom Alexander. It is Saturday, August 6th. It's about 11:05 a.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekly update that accompanies the written report that I send out each week. If you're not receiving this report, the written report, email me, Tom, excuse me, Tom at alexandertrading.com. I'll put you on the list and you'll get the report. Also, I would very much appreciate it that if you find value in this, that you like it, that you subscribe and you hit the notification bell. If you hit the notification bell, then you will be notified when I post something on YouTube, which I intend on doing more frequently, by the way. Okay, let's look at some charts and talk about the markets, the indices. Okay, this has really been a wonderful lesson and a number of auction market tools that I use to analyze the market. And I encourage you to go back and look at recent reports and follow the progression. Obviously, I don't know what's going to happen next week. These are my views, and I give my views each week. And you can go back and you can see how things play out. Everything that I use is based on auction market principles. There's no magic involved. It's basically price action through the lens of how auction markets develop. And it's the most incredible form of analysis you can possibly use. And it leads to the ability to make high probability trading decisions, whether you are a day trader or a swing trader. So where are we? Well, we're in various stages of upper extremes in terms of key reference areas. Key reference areas are areas formed in the market from where you're more likely than random to get a sharp move. Now we're at different stages, which makes it quite interesting. If you look at the at my chart here, you see the S&P, the Russell, the Dow, and the Index, the cash indices. The Index is in the middle of nowhere. The next objective level is around 13,560, and the Russell, as you can see, closed on its high on Friday. And really above Friday's high, there's not much to the upside in terms of volume on the horizontal scale that could act as resistance or stopping price. On the other hand, and this is what I think makes it really, really interesting at this point in time, you have the Dow and the S&P in minor balance areas perched inside, or in the case of the S&P, at an upper extreme of a larger degree key reference area. Now, based on some other things that we're going to get into, my best guess is that we're going to see another ramp higher next week, and that you're going to have a sharp move up. And that sharp move, following that sharp move, if it occurs, is going to be really, really interesting, because it could set the stage for some sort of retracement that is greater of greater degree than anything that we've seen, at least since the mid-July low. Now, I'm wrong about that, or that is invalidated if all four of the cash indices close below Friday's lows. If Friday's lows, if the indices, all four of them, close below Friday's lows at this point, that's a signal that that at least a short-term top is probably in place. Okay. Now, if indeed the S&P is able to break out of this minor balance area, it will also be breaking above this volume node formed back here in June. If it does that, then there is nothing in the S&P between about 40, the high 4170s and around 4308. And that's a level that could be reached very, very quickly. Could be reached very, very quickly. Okay, let me look over here at the report and let me just see where we are. I want to make sure I cover everything, because I think this week is important. Okay, let's take a look over here. let's start with this. Let's go to the profile view. Okay, I have been every week in the report, I put sort of a schematic in the report about the potential path the market may follow. Now, I've said many, many times, market profile is a wonderful tool that can help determine market condition. And that's how it should be used. It's not magic. It's been hijacked by the trading education magicians as magic. It's not. But you can see this is following an auction market process of development to the letter. We have a step 1, a step 2, 3, a step 1, a step 2, 3, and that's where we are. So in several degrees of scale, this market is due to move sharply again. So this is showing you this little balance that has formed in the S&P and the ES. And we're going to get a sharp break out of here. I think it's going to be to the upside. I'll share in a minute why that is. But if Friday's lows, if all 4 of the indices close below Friday's lows, I'm wrong, and you probably want to be oriented to the short side. This is something we do, we keep up with, and we monitor every single day for the membership. So that's something you may want to consider. Okay, let's take a look. Now, the technical situation. I'm going to talk about this further, but this is typical bull market behavior. We have the 5-day moving average now that has dropped rather dramatically, and there's been 0 price damage. What this is setting up for is a potential another spike higher and a divergence in this work. If it does that, and we reach somewhere up between, I don't know, 4250 and the low 4300s, that may be an area of at least a short-term top. Something else to consider, and this has been fascinating to follow. Way back on the report several weeks ago, the Monday, July 18th report, and there's a link to that in the written report this week. I mentioned that price and breadth can be a very, very useful tool, but it has to be put in a context. And what we had seen up until this point, since the January high, is a classic signature, price breadth signature of a bear market. And I wrote in that Monday's report that if something has changed, then we would see a persistent market, and this was actually a kickoff. And that is exactly so far what has occurred. Now, what I'm thinking, what could be, and we always let price action determine whether or not our opinions or our analysis is correct, because we're trading price. We're not trading forecast or analysis or magic. We're trading price. So if I am correct in my guess that this market is going to spike higher into 4250, 4300, then what is likely to happen is we get another expansion in breadth, but that expansion in breadth doesn't come close to plus, say, closing plus 2000. And it will be very interesting at that point to watch what happens. Obviously, if we do rally up in there, there will be levels that will be established on the way up that should not be exceeded to the downside if we're going to have further gains. And if they're exceeded, then that would be the signal to short, etc. So it's an if-then type of situation from a trader's perspective. But it's getting really interesting if we rally up into this general area in here, somewhere around, I don't know, 4,300, 4,250, and breadth trades up into this plus 12, 13, 1,400 area. It's going to be interesting, very, very interesting at that juncture. So we'll see how next week plays out. You guys have a wonderful weekend. Get rested up. I think next week could be, as usual, quite fascinating.